If you're looking to get a new home and save some money while doing it, a USDA loan might be just what you're looking for. USDA loans are one of the few 100% financing options available to home buyers in our marketplace. This can be the perfect option for first-time home buyers and other home buyers that don't have large amounts of cash on hand so that they can pay for a down payment. This allows you to avoid having to cough up a down payment that could otherwise be anywhere between 3 and 20% based on your loan option. But there are some things you have to consider before choosing a USDA loan for your new home. So in this video, we're going to go over the pros and cons of using a USDA loan. We'll also cover the eligibility requirements, loan restrictions, and we'll also discuss the loan limits for 2023. Hi, my name is Trenton Ward, and if you enjoy this content, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. So first off, let's talk about the benefits of using a USDA loan. USDA stands for United States Department of Agriculture and is one of the few zero down payment options out there that won't require a high mortgage rate. The goal of the USDA is to help lenders work with low and moderate income households to obtain affordable housing in rural areas. So if you're someone that wants to get a new home outside of your major city limits, this can be a great option for you. This is also a preferred option for those that want to buy a large lot and build their own custom home on it. Like its other government counterparts such as FHA and VA, you can expect a very competitive mortgage rate with this type of loan. And that's because the USDA backs the loan in case you were to default for some reason. So that's why even though there isn't a lot of equity to reduce the lender's risk, you can still get a low mortgage rate despite that. So now that we're familiar with the biggest benefits of the USDA loan, let's talk about how you can get one with the eligibility requirements. USDA loans are an income restriction loan option. That means that if you make too much money, this won't be an option for you. The income restriction is going to be based on the county you want to purchase your new home in. This allows for the loan amount to be adjusted based on the cost of living in that area. The median household income won't be able to exceed 115% of the desired location. The number of the people that reside in the home will also influence the income restriction as well. So for instance, if you have 6 people living in your home versus 2, you'll typically see a higher income limit for your area. The area you're purchasing the house in has to be considered a rural area, which is essentially a non-urban area. There are a bunch of qualifications the government uses to define what a rural area is, but generally speaking, it's based on the number of residents within the community or distance from specific areas. If you would like to see if the home that you're looking at is considered to be in a rural area, check the description below for a link to the USDA's property eligibility page. USDA loans are only available for those that plan to use the new home as their primary residence. So that's going to rule out the ability to use it as an investment property for you or someone else. You will also need to be a US citizen, US non-citizen national, or qualified alien to use this program. So now that we've gone over the benefits and eligibility requirements, let's jump into the loan limits for USDA loans. In addition to having income limits, you'll also have to stay within their maximum loan amount requirements. These limits will be based on the county in which you're purchasing the home in. The highest loan limit as of 2023 for a single family home is $970,800. And this is for Santa Cruz County in California, which is just south of San Francisco. For those that are in a more moderate cost of living area, you can look at Dallas-Fort Worth as an example. Most of the counties here have a limit of $425,000. So if you're familiar with the loan limits of some of the other more popular options, you'll notice that these limits are a lot lower. For instance, the FHA loan limit for the same counties here in Dallas-Fort Worth are more than $100,000 higher than the USDA loan limits. The same goes for conventional loans as well. But on the bright side, if you're buying a home in a more rural area, the homes won't cost you as much as they would have if you were buying in an urban area. So USDA loans are a great option for those that are looking to get a new home and want to reduce the amount of cash they have to spend up front. Because it's a loan option that's backed by the government, you can still get a competitive mortgage rate despite having a low amount of equity in the home. And since you're looking in more rural areas, the loan limit should still provide you with a lot of options for your next home. If you need any assistance with finding a USDA approved lender in your area, feel free to reach out and I'd be happy to help. Okay, if you've enjoyed the content, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. If you have any real estate needs in the Dallas-Fort Worth area, feel free to reach out. My contact information will be in the description below. And until next time, peace.